Supply numbers are a little bit healthier on the upper end of the market, upper upscale and upscale, and there's very de minimis supply growth.
Hi, this is Ed Watkins with Hotel News Now. We're here at the Lodging Industry Investment Council meeting during the NYU Investment Conference. During the session, we asked the panelists to give us their take on where the hotel investment climate is here in the middle of 2014, and here's what they had to say.
Well, I'd say, you know, it's reflective of where we are. People describe it and analogize it to a baseball game, so I'd say middle innings. There's a lot of good discipline in terms of the financing side. It shows in the limited new supply growth in the full service sector. So discipline from lenders, looking at underwriting in the right way, looking at trailing 12 months, a lot of analysis on sponsors, locations, so all that is in place, and I think as long as that continues with the right judgment, with the, combining with the underlying fundamental improvement in the hotel operation side, I think we're again middle innings in terms of where I would classify.
Increase in demand growth slows. You would have expected that occupancy growth line to get closer to 2.
I think there's still a lot of opportunities in hotels. I think we're seeing it come from a place in 2006, 2007 where lending expectations definitely were overheated. Went through the credit crunch, then into 2011 and 12, where it was a great time to be investing in hotels, a great time to be lending on hotels. And I think today it's still a fairly good time. It's not quite as opportunistic as it was, but I think there's still a lot of upside in hotels.
So what I have here for you are a couple of slides. Just starting out, room supply demand imbalance is still very much in favor for the first quarter.
I would say the current climate can be characterized as being reasonably enthusiastic or reasonably exuberant. The pricing of assets don't seem overly hot for most markets, with the exception of a few. Financing levels, I would say, are generally reasonable and responsible. It's a good time to be both buyer and seller. There's still some value add opportunities out in the market. Returns are coming down a little bit because risk is coming down a little bit. Hotel fundamentals are still very strong, and I think we've got potentially a medium-sized slow growth recovery here ahead of us.